Hey, what's up, everybody? It's Doug Shoemaker with the Shoemaker Loan Team at Homestead Financial Mortgage, and welcome back to 1 Minute Monday. I've been helping people buy and refinance homes now for over 25 years, and my goal is to provide an honest, education based experience that won't leave your hair on fire. And we do that by educating you along the way. We actually provide weekly updates once your loan's in processing, and each week I'm going to deliver the industry news, rate updates, and market advice, including whether you should be locking or floating in a way that you consume it best. Now, we also shop your loan application across the top banks and investors to try to get you the best possible pricing and programs that are going to fit your unique circumstance without you having to fill out a bunch of applications or get blown up by a bunch of calls and texts from people that you're probably just never going to call back. Now, if you just want to know what time it is, I'm going to deliver that in about the first minute or so here. If you like a little bit more detail, stick around and I'll spend about 3 to 5 minutes giving you some additional information. But if you're a clock builder and you just have to know how everything works, stick around just a little bit longer. I'm going to spend the last 3 to 5 minutes helping you understand some concepts or strategies so that you can learn to build the home loan clock on your own. Now, let's go ahead and get into it. Mortgage rates are under a little bit of pressure this morning as oil prices they continue moving higher after negotiations with Iran appeared to kind of break down over the weekend. Now, the concern here is that disruption around the Strait of Hormuz could continue, and that matters because oil markets, well, they affect inflation expectations really, really quickly. Now, tomorrow's CPI or Consumer Price Index inflation report, it's actually expected to come in hotter than last month. Now, mainly because of rising energy prices, and bond markets are paying attention to this. Now, as of this morning, the national average mortgage rates from Mortgage News Daily, and I'll have the link down in the description below, the 30-year fixed rate's around 6.42, the 15-year fixed is around 5.99, FHA 30-year is around 5.93, and the VA 30-year, it's at 5.95. Now remember, these are national averages, everybody, not your actual rate quote, but your personal rate quote, it's going to be based on a handful of stuff like your down payment, your loan type, the debt ratio, whether or not you're going to live in the home, and a bunch of other things that we do to just make it hard for you to figure it out. I'm just kind of kidding. You can apply pretty simply, and within a very short period of time, we'll be able to get you the rate that you're going to actually qualify for. But hey, if you like to learn a little bit more about how all this stuff works, check out my other video on why most people don't get the best mortgage rates and how to fix it. Now, moving on, the labor market, it still looks weaker underneath the surface than the headlines kind of suggest. The government jobs report showed 115,000 jobs were added in April, and that beat the expectations, but full time employment actually dropped by more than 400,000 jobs, while part time work actually increased. So the market's basically trying to decide which story matters more right now, a slowing economy or inflation potentially heating back up because of oil. Now, meanwhile, housing continues to show resilience. Existing home sales actually rose slightly in April. Inventory improved a bit, and prices are still climbing nationally. Now, the ICE Mortgage Monitor, which is basically a monthly housing and mortgage market report from ICE Data Services, it tracks things like home prices, affordability, mortgage performance, equity levels, delinquencies, and housing trends so that lenders and investors can understand what's actually happening in the real estate market nearly in real time. They reported the strongest monthly home price growth in nearly 2 years heading into the spring. Now, for lock advice, if you're closing in the next 2 weeks, I'd personally lean towards locking rather than gambling on what happens with tomorrow's inflation report. Now, I want to go a little bit deeper for those of you that like to know a little bit more than just what time it is. But before we do that, I hope I can count on you to take a moment to like and subscribe so you'll get notified of new videos that are meant to make your home buying experience a little bit less painful. And of course, please share this with someone else that you think might benefit. And please don't assume that all lenders share this kind of information because less than 5% actually do. Now, let's go ahead and talk about why all this matters for mortgage rates because right now the market's basically trying to solve three completely different problems at the same time: the labor market, inflation, and oil. And honestly, those three things, well, they're fighting each other pretty aggressively right now. The labor market, it's clearly softening under the surface. Yeah, the headline jobs number looks decent, but when you dig a little bit deeper, a lot of the hiring strength it's coming from healthcare and social assistance jobs, while full-time employment continues weakening and part-time work actually rises. Now, that usually happens when companies become cautious. And another thing that kind of stood out to me would be that continuing unemployment claims, they remained elevated, which means that people are still taking longer to find replacement jobs once they actually lose the job they had. Now, normally, weaker labor market data, it helps mortgage rates because investors start believing that the Fed might eventually cut that Fed prime lending rate. But then oil shows up and kind of punches the bond market right in the face. The problem with oil right now is that it impacts almost everything from shipping, manufacturing, airlines, transportation, consumer goods. And when oil spikes, inflation expectations tend to rise really quickly. Now, that's why tomorrow's CPI report matters so much. Markets expect headline inflation to potentially jump from around 3.3% year over year to somewhere around the 3.6 or 3.7 mark. Now, core CPI, which strips out food and energy, it actually matters more to the Fed long term, but oil has a nasty habit of kind of bleeding into broader inflation if it stays elevated long enough. And here's something that people keep asking that until now I really had not thought a whole lot about it. And that question is, Doug, if America produces so much oil, why are our gas prices still going up? Well, the answer is because oil's priced globally. Now, oil companies, they sell to the highest bidder on the world market, not based on patriotism and hugs, and not all oil's refined in the same way. Now, much of the US refining system, it's built for heavier imported crude oil, which a lot of US products are actually lighter crude. So even while America exports massive amounts of oil, some regions still rely heavily on imports. And that's why the market gets nervous anytime something happens in the Middle East. All right, now for my fellow clock builders that absolutely have to know how all this works, this market's currently trying to figure out whether we're heading towards slower growth and cooling inflation or slower growth and sticky inflation. And those are very different outcomes for mortgage rates. Now, if inflation cools while the labor market softens, rates are likely going to improve later this year. But if oil keeps inflation elevated while the economy slows, that creates stagflation risk. That's basically the economic equivalent of your transmission falling out of your car while your engine catches on fire. Growth slows, consumers get squeezed, borrowing costs stay elevated, and the Fed gets trapped. Now, we're not there yet, but markets are starting to pay a lot closer attention to that possibility. And this is exactly why mortgage rates have felt so chaotic lately. Now, one day the labor market looks weak. The next day, oil spikes. Then inflation fears rise. Then mortgage bonds rally. And then geopolitical headlines reverse everything by lunchtime. This is also why I keep reminding everybody not to obsess over daily headlines. Mortgage bonds and the 10-year treasury, they're still trapped inside of a wide range, and that actually creates a short-term volatility without necessarily creating a major long-term trend yet. And honestly, well, trying to perfectly time rates, it's usually a dangerous game because even if rates improve later this year, home prices are still showing resilience. Inventory is improving some, but nationally, we're still not sitting in an oversupplied housing market. In fact, 21% of homes recently sold above asking price. So while everybody online is screaming that the housing market's collapsing, the actual data continues showing a market that's cooling in some areas, but still fundamentally undersupplied overall. And I've personally never ever seen the price of anything consistently fall when there's high demand and low supply. That doesn't make sense. This is why strategy matters more than emotion. Look at the data. Don't let the fear mongers mess with your emotions. This is also why working with somebody who actually studies the bond market, inflation data, and labor reports can make a huge difference. Now, most lenders are simply quoting rates. Very few actually help people understand how it all works. As I said, literally less than 5% of loan officers even talk about or give rate lock or float advice while they're working with their clients under contract. Well, that's all I've got for this week, everybody. But don't forget, through the Home Foundation, our goal is to make homeownership more affordable for our military, law enforcement, and firefighters. And we do this by partnering with local service providers. Most of them are heroes themselves who actually understand what you're going through, and they're going to help guide you in a way that others either can't or won't. So some of them even offer discounts. So make sure you reach out today to see what kind of difference we can make. Now, if you are a local service provider that loves on the community I'm speaking of, or maybe you're a local charity that supports them, make sure and reach out as well. If you do something special for our local heroes, I don't want to keep you a secret. Well, that's all, folks. Have a great week, and I'll see you next week on 1 Minute Monday.